Hi, my name is Tony Abrahams, co-founder and CEO of AI Media. Today, I'd like to begin by paying my respects to the traditional custodians of the land on which we all meet across Australia, and pay my respects to their elders past, present, and emerging. At AI Media, we aim to make the world's content accessible for everyone. When I started the business 18 years ago with my co-founders, Alex Jones and Leonie Jackson, we were very much focused on making the world's content accessible for people with hearing loss. And indeed, we started AI Media by providing captions to the pay TV industry in Australia and grew that business where we now provide captions nationally for Channel 9 and Channel 7. But in 2017, we pivoted the business and went global, and we also expanded the range of services we provide towards languaging. And today we are a true one-stop shop where we provide live and recorded captioning, transcription and translation globally. And we've experienced great growth, especially in the last 12 months since we listed on the ASX in September of 2020. At a glance, AI Media operates in 3 product lines, being live broadcast, live enterprise, and recorded media. And we've experienced very strong growth over the last few years. Organic growth, as well as growth by acquisition, really cementing our leadership position, not just in Australia, but increasingly in North America, Europe, Middle East and Africa, and Asia. At AI Media, we invested over $50 million in R&D in our world-leading technology platform between 2009 and 2019, and then $48 million in pivotal acquisitions that we've undertaken since September of 2020. We have 2,200 global customers and over 3,000 skilled contractors. We deliver to top shelf customers around the world, be they broadcast, education, corporate, or government. AI Media is truly a one-stop shop, and we deliver captions, transcription, and translation in any language, from any language to any language, streamed in any format to any device. We do that both for live and recorded. And since May of this year, we can offer it in 3 distinct pricing tiers. Premium, which is the product that we've historically provided that delivers over 99.5% accuracy that you can see when you turn on the TV for Channel 9 or Channel 7. A fully automated product, which is our Lexi product that we gained with the acquisition of EEG, and our Smart Lexi product, which is a combination of our homegrown Smart ASR product and is something that we have delivered for the NBC Olympics across the Peacock platform, and which we have also launched on Sky News Australia. Key highlights for FY21, it's been a big year. And our maiden result has exceeded our prospectus forecast, and our 3 US-based acquisitions contributed further part-year upside. We've increased our gross margins throughout FY21 and achieved positive cash flow and EBITDA in the 4th quarter of FY21, and we are expected to continue to be profitable and cash flow positive. We launched our breakthrough SaaS product line, including the fully automated Lexi, the semi-automated Smart Lexi, in addition to our premium AI Live product. And we successfully delivered our first index customer for that Smart Lexi product, being NBC's Olympic coverage across 60 channels, the most watched television event in history, with 150 million people viewing it. We also delivered for the Olympics on Channel 7. And we secured a 3-year extension on that Sky News Australia deal with this new SaaS product line. We also secured new customer logos internationally, including Al Jazeera and the UK Parliament, being the first person to deliver captions to the House of Commons and the House of Lords. In terms of the numbers, we delivered statutory revenue of $49.2 million, which was $5.4 million ahead of our prospectus forecast, which even when you back out the contribution from the acquisition, was comfortably ahead. Our caption minutes increased considerably with that increased shift towards the SaaS products, now delivered 16.8 million minutes. Those 3 successful acquisitions are now embedded, and we delivered a gross profit of $20.4 million, 2.3 million ahead of the prospectus forecast. The gross profit margin was up from 39% last year to 42%. But the really exciting thing about that gross profit number is that we exited the year at 50% gross margin. So the acceleration based on the improved product mix, but also the result of product spend and technology automation is considerable and accelerating. We finished the year with a very strong balance sheet and almost $18 million in cash. The pivotal acquisition of EEG in May of this year really was game-changing. EEG is a business that's over 40 years old and has been the leader in video technology and captioning technology over that period. It really does afford us now the opportunity to be a one-stop shop for anyone's live and recorded captioning, transcription, and translation needs. And the key assets that the EEG acquisition provided us was both the video processing technology, because there's no point being able to add captions if you can't also look after the customer's content. And again, there has been no better example of this than NBC trusting us with the processing of the streams for the Olympic Games, which of course went flawlessly. The other key asset that EEG provides us is the ICAP network. And this is a proprietary but open network that connects captioners and content right around the world. And this is a network that has become the default standard in US broadcast, and it's a network that we are looking to expand beyond US broadcast into US enterprise and indeed right around the world. And then on that, we can layer the captions, transcription, and translation solutions either at that premium AI live end or the semi-automated smart Lexi or the automated Lexi product. With that EEG acquisition, our minutes have increased by 900% over the last 12 months. And what's really interesting is that our organic growth has grown from 800,000 to 900,000 minutes. And then already you can see just the enormous step change that the EEG ICAP network provides us. What's really interesting that of the 6.1 million minutes currently delivered on the ICAP network, 1 million of those minutes are currently delivered with the fully automated Lexi solution, which is the best in class and much better than out-of-the-box automatic speech recognition or ASR solutions. What we are targeting is some of that 5.1 million minutes that are currently being delivered by AI media competitors, almost all through a high-cost premium service. As we get better and better and work with more and more of our partners to deliver better solutions for automated and semi-automated captioning, we're expecting that 1 million minutes and that share of the total to grow in FY22. And we're expected to expand that ICAP network beyond US broadcast. In terms of key operating metrics, we increased the number of captioned minutes well above prospectus forecasts, and the revenue per minute fell in line with the more cost-effective offerings that we were able to provide in terms of Lexi and Smart Lexi. Importantly, though, the margin per minute remains strong, and that reflects the increased margin that we get from these SaaS products. SaaS revenue as a percentage of the total was 8% in the month of June of 2020, and we're expecting that to grow, and that will be a key measure of success going forwards. Some of our customer wins in FY21 show the quality and diversity around the world of our trusted customers. The strongest growth in FY21 was overseas. In fact, our domestic business went backwards, albeit slightly, largely as a result of live broadcast and live events being impacted by COVID. But the rest of world number really stands out because that 185% growth was entirely organic, while the North American growth of 372% also included those acquisitions. The revenue geographic mix is now very much offshore, with local percentage falling to 36% from 70%. Our key growth drivers going forwards will be those SaaS products, as well as selling the great EEG kit that has almost universal coverage in the United States selling that into the international markets. In terms of customer mix analysis, also a lot more diverse, and with the 87% growth year on year of revenue, we've also seen a more balance between our broadcast, education, and government and corporate accounts. Last year, 45% of our revenue was delivered by just 3 customers. Today, our top customer represents less than 10% of the total. In terms of the FY21 revenue bridge, we went from 26.3 million last year. Organic growth right across the business was 25% in constant currency terms, but we also gained from having 12 months of an acquisition that we completed in May of 2020. The acquisitions we made in FY21 contributed 4.1 million in revenue, and there was a small negative currency impact. In terms of assessing against the prospectus forecast, if we strip out the acquisitions of EEG and the bolt-on acquisitions of Caption IT and Caption Access, we come to a normalised total revenue of $45.1 million, which beat the prospectus forecast by $1.2 million. Importantly, also, the bottom line had a $400,000 improvement on forecast. Critically, the acquisitions also tell a great story. They tell a story of us being able to, in the terms of the bolt-on acquisitions of Caption IT and Caption Access, significantly expand the bottom line performance from what was barely break even to delivering a 25% EBITDA margin in the first 6 months of integration. And the EEG integration after 2 months is almost complete. And that's because the product set between EEG and AI Media is so complementary, and also because we've had the benefit of working with the EEG team as a value-added reseller for the last 2.5 years. In terms of the balance sheet, we end the year in a much stronger position. We had $5 million of positive operating cash flow in the fourth quarter, which considerably contributed to that strong cash balance. There is a provision for an earnout of $4 million for the EEG vendor. And we are looking to ensure that we have capacity to continue to grow the business in what is a fast consolidating and growing market. In terms of property, plant and equipment and intangibles, the goodwill has gone up as a result of the acquisitions. And we also acquired a block of land and a factory on which the EEG equipment is made in Farmingdale, New York. In terms of cash flow, we had proceeds from the IPO and proceeds from the EEG capital raise, which also facilitated the repayment of debt and transaction costs. We ended the year with no debt. We had a negative operating cash from operating activities throughout the year. But of course, that was a positive contribution in the fourth quarter. So it was a very, very fast turnaround throughout the year. 25.9 million spent on acquisitions, leaving us with a cash balance of 17.9 million and expected to grow through FY22. In terms of outlook, our competitive advantages remain the same as what we put in the prospectus, albeit that we've doubled down on that. So we've got more proprietary technology with the EEG product set. Our security has been further enhanced with our ability to deliver services entirely behind customers' walled gardens. We've integrated our systems seamlessly, both within the iCap platform and within different video players. We're able to offer multilingual on everything we do, and our global footprint is supported by local sales teams. The key focus is for us to take EEG's winning US market share and open up our global markets. And we're finding well over 80% of our sales pipeline in FY22 is being led by the breakthrough EEG products that we can offer. We're also looking to increase the share of SaaS revenue from Lexi and Smart Lexi, and as we work with customers to collaborate to ensure that more and more of that content is suitable for this automated and semi-automated process. And as I said earlier, the share of success this measure of success is going to be determined by how much we can continue to improve SaaS as a percentage of the total. Our 5 SaaS products accounted for just 8% of total revenue in June of 2021. And we're hoping to see that grow to around 40% within the next 2 years, where we see hardware fall to around 10% and services to around 50%. We finished the year, as I said, at a gross margin of 50% and a pro forma revenue run rate of $60 million. But you can see as that services mix declines in relativity and you get more revenue from SaaS and more revenue from hardware, we're expecting that 50% margin to continue to increase. In terms of outlook then, we've got a large and growing market supported by regulatory and commercial tailwinds. We've got an established global presence with local sales teams and a great board, industry-leading platform, a scalable business model, a large and increasingly diverse top shelf customer base with very strong repeating revenue, strong revenue growth, growing margins and EBITDA, a transformative SaaS product suite, and a one-stop shop offering for our large customers, cash flow positive and well positioned for growth. For further information, please check out our investor relations website, and thanks very much.